Everyone. Thank you for joining us today for our second session of the Pulse Live. For those of you that don't know us, I'm Maria.
I'm Tim.
And I've been trading for over 12 years now. 8-ish of those years I traded professionally, both retail and institutional. I am mostly a technical trader. However, I do combine some fundamentals into my trading. My style is primarily scalping with just a little bit of swing trading mixed in. I mostly trade options, but will also trade common shares as well.
I've been doing this 20 years, mainly scalp, some swings, light investing, very light. That's about it. Mainly options. I do some low floats on occasion. Here and there, I'll scalp the Qs and maybe NVIDIA and some of those things, just the stock, but mainly options.
Perfect. So I kind of wanted to start with some of the bigger items from last week. We still saw volatility in the markets. At the beginning of the week on Tuesday, Fed Chair Jerome Powell's testimony took us on a little bit of a ride. He came out more hawkish than we expected. He was optimistic on the pace of inflation and economic growth, which in turn sent yields up and it set the markets down. Traders were adjusting to the possibility of 4 rate hikes instead of 3 rate hikes. On Thursday, when he spoke to the Senate, he was definitely more careful with his words, and he did state that he didn't see any evidence of the economy overheating. Also on Thursday, President Trump announced that he was set to impose tariffs on aluminum and steel imports, which was great for aluminum and steel stocks on Thursday, but the announcement set the rest of the market down. Following that announcement, the EU threatened to increase their already steep tariffs and barriers on U.S. companies doing business overseas. To which the president responded in a tweet by saying that he would apply a tax on European cars coming into the US if the EU followed through. So let's talk about that just a little bit. Why would the market drop on that news? Here's at least part of why I think we saw the market take a hit. We don't necessarily like phrases like trade wars or global trade wars or even the word tariffs. Those kind of words create uncertainty, and that uncertainty translates into what? Volatility, which most of us are just now getting reacquainted with. So here's kind of what I think. Our fundamentals are still strong, but the threat of a trade war adds more uncertainty to the concerns about inflation and the prospects for our economy's long-term growth. Investors and traders are not only concerned by the action of imposing tariffs, they're also concerned about how foreign trade partners may retaliate and how that retaliation not only affects our economy here domestically, but also how that affects the global economic growth. And that concern is reflected in the VIX. We saw the VIX jump sharply on Thursday and again on Friday, where I believe it traded above 25 before it pulled back that afternoon. And for the week, the VIX closed up 18 to 19%. So yes, we did see it pull back a little bit on Friday, but over the course of the week, it still closed up quite a bit in my opinion. And that kind of brings me to the next little topic. I want to talk a little bit about volatility for a few minutes. And I'm probably going off on a tangent, but I think it's really important that we talk about it. And I guess so far, I don't want to say the word spoiled, but I can't really think of another word to use, so I'm going to use spoiled. We've been spoiled by the lack of volatility for more than a year now. And Tim, do you remember when we first met how we used to trade, what was it, UVXY, TVIX, and SVXY almost every day, right?
Yeah, through a lot of 2016, it was that way. We used to talk about the TVIX millionaires because everybody thinks for some reason, if, back then, I don't know if it's Dow 16,000 or whatever, but if there's Dow 16,000 and let's just say TVIX was at 20 and, then it comes back down, they think every time that number hits, TVIX is supposed to be the same or worse, and it doesn't work that way. They don't really understand a lot of what that is. But through 17, we barely, I can think of 3 times in 2017. Actually, maybe twice, maybe 3 times in 2017 that I even traded those.
Right. And then just all of a sudden, we had to stop trading it. There wasn't any volatility there at all for us to even trade it. Not until about a month ago when we saw that volatility start to come back. And I'll be honest, personally, I love volatility. And for those of you who don't necessarily know how I trade, I don't really care what kind of market we're in. It could be up, down, sideways, backwards, zigzag, whatever. I will usually find a way to trade it. But I can definitely say that I have missed volatility. I don't think I don't think I even realized how much I missed volatility until it came back. They say absence makes the heart grow fonder, or however that saying goes. For me, it was absence made me completely forget about it, and just completely. And when we saw that come back, I was more excited trading than I had been in I can't remember how long. As a scalper, I want that chop. I want to be able to get in and out a billion times. Okay, maybe not a billion times, but I think you guys know what I mean. So for me, volatility is my friend. But we've been so spoiled by the lack of volatility that its return has caught a lot of people off guard. And newer traders who haven't ever even really seen volatility are going batshit crazy right now because they have absolutely no idea how to react to it. I get DMs almost daily, not just in our room. I get them on StockTwits, on Twitter, even on Facebook. And I don't even use Facebook really anymore, except to like say happy birthday or whatever. But people are sending DMs and they are freaking out because the market is down, a couple hundred points or whatever. And it almost makes me want to laugh because in my mind, I'm looking at it like, thank God we're down a little bit. We kind of need a little bit of a pullback. And no, I don't really laugh at anyone, but getting these DMs has made me realize just how unprepared a lot of traders are for even the slightest pullback in the market.
Well, everybody here that knows me and that's been trading around me for a long time, if you look at last year, mainly I'm just trading stocks, right? I mean, I'm just trading MU all of last year. I'm trading Microsoft all of last year, or Facebook all of last year, blah, blah, blah. This year, or at least in the last probably month or longer, I've been trading the Qs. Like everybody's putting out, you'll see Vishal talking about AMAT and, Splunk from Tech Money. And I'm just sitting there trading the Qs, because usually I don't get those kind of swings, right? So when I do get them, it takes me right back to my old ways of just, I don't trade the SPY. I probably should, but I get into more trading the Qs and stuff like that. And, once everything calms down, all of a sudden I'll be right back into stocks just like I always was. But, the volatility, I don't get to trade, the Qs very often. I mean, sometimes it just like most of last year, if I did trade them, you could just buy them, sit in them all day while you're trading something else because the market's just going up every day. But now you're getting to play both ways again, which I've missed. And the thing too is when you get this volatility like this, and especially when markets are like not at all-time highs, but close enough that anything makes people nervous, right? Like when Kylie Jenner said something about Snap, and it just boom, stock tanks, right? McDonald's gets a downgrade and it's down $8. I've never seen McDonald's down $8 since I've been trading, right? Boeing takes a big hit in a couple of days. So you get those chances, and we had a lot of traders actually got to buy Boeing, down at 235 the other day, which is levels we've talked about before. But we had a couple of people that got to take advantage of that, and sharp tanks, and they get to write it back up. So volatility is fun. I know it feels bad if you're an investor, but if you're and especially if you're like overweight in your portfolio and long positions and everything. But if you're like a lot of us that are, 80% cash, 90% cash, some light swings, like when we get Visa drops under 120, we like to jump in. I think we got it at, 115 and 116 both recently and got out in the 120s. I know some people got in on Friday's dip under 120. So we like to do those things, but because we're sitting on mainly cash, we can do those things, right? So you need that volatility to get those days like that. Microsoft, we hadn't had a chance to get back in yet, so I may end up kind of semi-chasing that one if it breaks the highs. But anyway, you got to have some volatility. You don't have to, but it's fun, right, for us, especially if you're sitting mainly cash.
I agree. So I guess the whole point of this little tangent is to say that I think that we do need to stay prepared to see continued volatility. And that does not mean that we're necessarily going to see crazy swings in the VIX or in the markets. You never know, we might, but I do think that we will see more movement than we're used to seeing. And I do think that we should stay at least semi-prepared for it. But I don't want anyone to take that as a bearish statement. I am still very bullish on the market overall. Could all of this stuff that's going on right now, could it have a negative effect? Absolutely. But for now, I'm still bullish. Am I investing 100% of my cash into the market? Absolutely not. But I wasn't ever doing that to begin with. And I know I've told the room a million times by now, probably. Cash is a position. At the end of the day, I like going to sleep with, 98 to 99 of my quote unquote portfolio in cash. So for me, what I'm planning on doing is I'm going to continue to do what I've been doing. I'm not going to stop trading because we are seeing fluctuations in a market that is meant to fluctuate. A 1,500 point swing on the Dow over however many days, like we just saw, is not enough to scare me. Am I cautious? Yes, I will stay cautious. Like I think everyone should be at any time, no matter what the market looks like. I think everyone should be cautious when you're putting money into the market, and especially since we've run up as fast as we have and as much as we have. So I think for now, unless I see big money institutions getting scared, I'm just going to continue to keep doing what I'm doing. I'll take my profits. We are, still technically, we're close enough to all-time highs that it's still pretty much all-time highs. I'm not putting large chunks of money into anything, but I am putting some money in, and I will take my profits quickly, and maybe let a small piece continue to go just in case I think it, just in case it continues. So now that I've taken up way too much time, let's get back to stocks. Last week, we saw some low float, lower price stocks run, right, Tim?
Yep, ECYT, that was a good alert. That one, and it ran for a couple of days, or not, consolidated, went, made some moves higher into the end of the week. But you haven't been seeing, one of the complaints I've got on Black Box, from the stock traders, because options traders, we always have something to play. No matter what the market is, we have something to play. But the low float guys have been sitting around going, what's next? When's it coming? When's it coming? And this week, finally, ECYT, 10X, which I think you've got a screenshot of. Finally, the low float people got something to have fun with too. Even Wyatt Bridge was talking about, whoa, supernovas are back. So it was kind of exciting. I almost dabbled in a couple of them myself. I didn't, but it was tempting. It was tempting.
And ECYT, if I remember, and it shows it right here, ECYT, that one alerted at $4.60. I don't remember exactly what day it started running, but it was $4.60. And let me pull up the chart on that. It hit a high of 670. So not bad. And you'll see, like, back here, what day was this? Wednesday. Prior to Wednesday, it was, up a couple cents, down a little bit, kind of consolidating. Wednesday, it took off. We have your levels of, some levels of support and resistance that it actually held. It consolidated for most of Thursday. Friday, took a little bit of a dip and then just took off. So that was definitely a good one for the low float players out there.
Pull up 10X. I want to see 10X too.
Sure.
That one was fun. I didn't play it, but I knew I got a couple of DMs from guys that did, that were like just so happy.
So, and 10X, I think it alerted at $5.89. Let me get that chart pulled up. I have that too. And let's see. So that one, we alerted it, and then it hit a high of $12.63.
Yeah, that was a crazy move. That was a crazy move. That was a supernova. But we had a lot of good moves last week. Thursday we played UPS. I remember Pete came, he was in the room and he mentioned something about takeover rumors, and we just jumped UPS. The second he said it, there was probably 50 or 60 guys. I know Tech Money had like a 60-second trade for like $1,000 or something. So that thing was moving fast. That was fun. But we had been watching that one, UPS, for a while anyway, and there was, I know Vishal and Tech Money both had did some DD on that one, so that was a good excuse to buy that one. UPS was fun. MU, what a week. The flow on that one has been sick for about a month on MU, and it just keeps coming. So we're watching that one this week too, but I'll get back to that one in a second. Stamp had a nice day Friday, and that's the thing too. And Tech Money said it best the other day. He goes, no matter what the market's doing, there's always something green, right? And I can't think of any market days where there wasn't, and I guess there's been a couple probably, but there's always that one thing moving. And Stamp, that was a good day on Friday. So there's always something moving, no matter what the market's doing. You just got to find it, and that's the good thing about as many traders as we have. There's always eyes on something. So if you don't see it, somebody else does, right? Nectar had a good day on Friday. Hopefully that's going to have some continuation. But anyway, yeah, MU, what a week. I mean, it was just a good week. Good trading.
There's your chart on Nectar post DR. I mean, that was beautiful. So here's a funny story: is I bought calls on Nectar probably in this candle, in this second candle, and on this third candle, I totally punked out. I took a little bit of a loss on it and stopped looking at it. I was playing the cues and stuff like that, but I really wish I had held on to that because that would have been a really nice play.
Jeez. Yeah, it happens, but that's the thing too. We're not perfect traders. And, we get a lot of, do you guys have losses? Yes, we have losses. There you go. Maria just took one right there in the stock run the rest of the day. I had a loss in MU one day last week. I was trading MU, and literally 20 minutes after I dumped out for like minus 20%, if I would have, literally 20 minutes later, I don't remember what day it was, I'd have been up 50, 60% 20 minutes later. So, it happens. It happens to all of us. Yeah. The object is just win more than you lose, right? Cut your losers quick, let your winners run, right?
Absolutely. So some of the other stocks that ran or sectors that saw some strength, retailers, Dillard's had a really great day, or not day, week. That was on ER. Target actually had a decent week. And I believe don't they report this week, or have they already reported?
I truly don't know.
Let's double check that real quick. For some reason, I thought that they report on Tuesday. Yeah, Tuesday the 6th is when they report. I'm not sure what happened exactly this day to make it spike like that, but it had a nice week for sure.
What day was that?
That was on Wednesday.
Who else reported last week in that sector? That was probably why. I think all retail probably.
KSS reported that same day. BBY. Oh, Vishal. Thank you, Vishal. I had, I need TGT. Sorry. Here's Target. So Target, sorry guys, that was looking at TJ Maxx's, TJX. I was looking at their chart, not Target's chart. So Target releases on Tuesday. It looks like last week it hit a high of 78.43. Up off that low a couple points. So let's see I'm watching this one because there could be some movement ahead of the ER. And if there is, I'll try to scalp it at least. Gap had earnings. So they popped up, gave a little bit of it back, but not too much of it. There was also Best Buy. Macy's, yeah, Macy's. There's your Macy's chart.
Yeah. And that's one, that's one trade I wish I had back last week. Because I remember when Macy's came out and I seen it that morning over $30. I said, guys, I'm not paying $30 for Macy's, but if it gets back in the 28s, I'll play a $30 shot on it. And sure enough, it went right down into the 28s and right back to the 30s, and I missed the whole thing. There again, not perfect. I mean, I called it in the room. If I get 28.50, I'll jump back in for 30s, and didn't play it. Didn't play it.
Look at Nordstrom's, JWN. Look at Friday. Beautiful day. I completely that all together. Beautiful day on Friday.
How many months is this chart?
That's just a weekly.
That's a weekly? Okay.
Mm-hmm. That's a weekly. Do you want me to go further out?
No, I was just looking at that. I mean, no, that's fine. I could see yeah, that's fine. I'm just looking at the business that it hit.
Right. A couple others that moved. PBYI, which tends to get beat up quite a bit left and right. That had a really good day on Friday. W Day. I love this stock. It is a great stock to play. It's not usually really volatile. It doesn't trade super heavy or anything like that. I think I don't remember what the 10-day average volume is, but it's not, there's not a lot of shares traded, but it's a great stock, and those contracts will move. The same with now. ServiceNow. Look at Friday. I'm so mad I missed this one on Friday too. I got caught up with the queues and completely missed that run. So that was almost a 10-point move.
Jeez, that is
almost 10 points in one day. Shutterfly. I've been liking Shutterfly a lot. I played Shutterfly after their earnings, and then again on, what day was that? Teresa actually spotted it in the room. I played it after she spotted it and made a nice chunk of change on that. And it had a nice move again on Friday. So if it can, I'll keep an eye on it. If I'm not looking to swing these positions. These are scalps for me. These are intraday trades. This is not anything that I would be looking to swing overnight. Let's see, what else was there? I think that was all of the ones that I saw that moved really well that I completely missed. But they did move very nicely. So those are just some to keep an eye on for any potential continuation. And let's go back to this thing. So that was a little bit about last week. Let's take a look at next week. This is next week's economic calendar. So as you can see on Monday, we have the market services PMI. We have ISM non-manufacturing index. On Tuesday, we have factory orders. On Wednesday, we have a few more items: ADP, employment, trade deficit, consumer credit. Thursday, the weekly jobless claims number is due out. And Friday, we have non-farm payrolls, the unemployment rate, average hourly earnings, and wholesale inventories. Next week, we also have some decent ERs. And here are the ones that we're watching a little bit closer. Some of my favorites are up there. I love YY. I love Autodesk. Bison is a good one. All of these that are listed up here, aside from maybe Kroger's, but the majority of these listed up here are usually movers. So there's just a quick little graphic to show you what days they're reporting.
Is Thor Wednesday? For some reason, I had that in my head on Tuesday.
I have it on Wednesday.
Let me pull it up real quick. Yeah, 3/7. So yeah, you're right. Wednesday. Wow.
Okay, so let's look at some potential plays. For next week. We'll come back to this slide in a moment. Tim, we didn't talk about Netflix yet. Can we talk about Netflix?
No, Netflix all-time highs on Friday and kind of a shaky day. I think it's up for 8 Academy Awards tonight or today, tonight. So there's going to be a lot of Netflix talk. I was not expecting that Friday. I remember looking at those contracts. Actually, I think it was down $2 and change when I pulled those up, and I'm like, man, what's the odds of this going green? Because we like to play Friday expiration anyway, right? We call it 100% Friday. So I'm looking at those contracts, and I forget what the price of them was now, but I'm like, it was only down a couple bucks. It then came back, and I'm like, geez. And that's one trade I wish I had back. That in Macy's too, but that Netflix and NVIDIA, but forgetting NVIDIA, Netflix all-time highs. Tech is hanging in there. So, I mean, I like it. I'm not saying I like it. I like to watch Netflix into next week. Nectar, you talked about that one earlier, or maybe I did, but it had ER on Friday. So I'm definitely watching that for continuation. TTWO was popping on Friday as well, if I remember right. Have you got TTWO out there?
It's pulled up right now. Okay. So it moved up. Well, that was a nice little move. What, 3 points and change?
Over 3. So MU, definitely watching, see if MU can hit those highs.
There's the chart.
That's MU, yeah. So that's getting close. That's getting close. Splunk, they had ER Friday, finally had crossed $100. Let me see where it closed. Splunk, yeah, 102.32. Jeez. So yeah, I mean, I remember the days when they used to come out and report and we'd say, "Don't get splunked, don't get splunked." But the last two ERs, I know Tech Money's had calls going into both and has killed it. So he's splunking splunk now. But the thing I like, especially with TTWO, which reported probably about 2 weeks ago, um, and Nectar and Splunk, and you got MU reporting right now, especially in a choppier market. I like the ones that have just reported in the last couple of weeks that gave good guidance, good direction, because they're easier to play. You don't have it. It's the ones that are in no man's land, right? That still the Facebooks, the Amazons, and some of those. Forget Netflix because that's just, breaking every rule out there. But the ones that have recently reported or are about to report are a little bit more stable. I shouldn't even say about to report some of those, but the ones that have reported, we've already got their numbers. We don't have to worry about it. We don't have to stress about it. It's the ones that, you haven't seen numbers out of. Like Splunk won't take the kind of hit if it's a real bad day, Monday, some of the other things that would, because don't know what's going on there.
Okay, so yeah, here's a funny story about Splunk. I YOLO'd a call on Splunk with Tech Money, and guess where I sold Splunk? Probably right here in this candle. Took a loss on it, nothing huge, but yeah, that's another one I wish I'd held on to. But again, I was distracted by other tickers. So yeah, we all do it. We all sell at a low point only to have the stock turn around on us and just run. But that's okay, right? There's not like there's nothing, there's no way to not know if you don't know the rest of this day's happened yet, right? So if you're in this candle and you've broken that low a day and you see this huge after hours candle and you know that it could potentially fall back down to 94 or even lower, what are you going to do? You're going to cut it, right? And that's what I did. And then I just didn't look at it again. So that's my funny story or not funny, but you know what I mean. That's my story on Splunk. So I got Splunked this quarter. What else do we have next week? I know we have, hold on, we have the JP Morgan Gaming and Lodging Restaurant and Management Access Forum this week. That is a mouthful to say. It is a JP Morgan conference. There are a bunch of companies presenting there. It is scheduled to run from March 8th to March 9th. And the companies I want to keep an eye on for a potential move are Planet Fitness, Starbucks, Marriott, Shack, Yum, and Din. The next event that we have is the Geneva Auto Show. And we have some cool stuff coming out this year. I will be watching Tata Motors, TTM, for a potential move. What else coming out? We have the new Audi A6, the production form of the Audi e-tron, the concept form of the BMW M8, the production form of the Jaguar I-Pace, the upgraded Mercedes C-Class, and Race will also be there, and they are showcasing one of their models. I don't remember which model, but they will also be there. And those are some of the more highly anticipated events coming out of Geneva this week. That is scheduled to start on March the 8th. And also, Ford is expected to make a larger presence than normal this year. So that's usually a lot of fun to at least see what new stuff is coming out at the very least. I'll watch these tickers starting on the 8th. I'll throw them up on my screen, one of my screens, and see if we see any movement in those. I am holding calls on Race right now. So, and they, hopefully those will look a lot prettier this week. And airlines. So airlines, I want to keep an eye on. There are a number of airlines that will be posting their February traffic reports this week. So, DAL, Love, AAL, UAL, Hawaiian Airlines, JetBlue, those are all of the airline stocks are the bigger ones that I generally keep an eye on. So we'll see if we see any movement out of those this week as well. And then lastly, CVX has an analyst investor day on the 6th. American Express and XOM have their annual investor analyst day on the 7th. I'm not sure if we'll see any movement out of those ones, but I will keep an eye on them just in case. And if they're scalpable, I'll scalp them.
I like to keep an eye on AXP anyway, because especially as a Visa owner, so that's cool.
Absolutely. Tim, any other tickers that you have to add today?
I'm just watching everything. I'm just ready to go. I can't wait for the futures to come out. Are the futures out yet? Do we have any indications? Asia or anywhere?
I'm looking. We have, no, I don't think are the futures out yet? The data is delayed. First, I thought they opened at like 6 or 6:15 Eastern on Sundays. Vishal says they are open 6 p.m. Eastern. ESNQ are open. We're down 100 on the Dow. Both down. Down 6 on the SPY. 12 on NASDAQ.
Huh.
Thank you, Vishal.
Thanks, Bunny.
So what questions do you have for us? Throw some tickers our way. They don't have to just be tickers. Any questions that you might have, send them our way. Let's look at some of the charts that you guys want to look at. We did have a question. Where did that go? Where did it go? So Nate is in WTW. Let me pull up WTW. So this is the weekly. In at 63 on Friday. I like it. It looks like you might have just a little bit of support on, oops, what am I doing? You might have a little bit of support even at 61. Tim, what do you think about WTW?
Interesting. What a big run, though. I mean, it's one I don't really, I mean, I like to watch. It's hard for me to play on. If you had physical stock, I wouldn't sweat it. If I was in calls, it might bug me a little bit. But are you in stock or in calls? I can't see the questions. You'll have to check it, Maria.
He's in stock.
Okay, good. Yeah, I kind of like it down here. You can.
I like it as well. I don't. Let me go a little bit further out. I'm gonna say I don't want this to break under 61.
Yeah, I would agree with that, because if it does, then you got some. Oh wow, yeah.
A little bit of support at 59, maybe just a little bit around 57.
Right in there, and that 57 is where I see it, and then after that, you've got some gaps.
Right. So if you're in it, I would definitely have a stop in. If you're willing to let it ride down a little bit more. For me, my final get the heck out is going to be probably like 60, 75 is where I'd put it. But if you're wanting to stay safe, I'd say 61.
That's close right there. That's close.
Perfect. So he says he'll cut it at 61. So if it doesn't work out, he has his max. I'm out at, his max loss already calculated. Good job. Awesome job. Daniel is asking, any ideas on the Qs? The Qs have been so much fun. So much fun lately. Oh, look at that. Close enough to a double top for me on a yearly. Let me go in a little bit closer. Whoops. So, and okay, I agree with Tim. I know we've had a couple people say this recently too. what makes me really be not so worried or not really too concerned with the fluctuations we've been seeing in the market is the fact that people are still buying tech. Now, tech is your high flyers, right? So you like these are stocks that people know are going to be more volatile. If we were seeing a sell-off in tech, I might be a little bit more concerned. But tech is still strong, in my opinion, and people are still buying it. It dips, people buy. It dips some more, they buy some more. So I think that we will continue to see chop. There's a lot of geopolitical type of stuff going on. Headlines that could potentially cause some volatility or some chop in the tech names. But I think if you are holding for a longer period of time, I still like tech. I love the fact that people are still buying it. What do you think, Tim?
I mean, I like some of it, but I'm just, I like to just be in and out. So it's, eh. Longer term bull, shorter term chop. So, if I get the right entries, on Microsoft and some, I'll pick some up. If I get the right entries on anything, I'd pick it up. But yeah, I mean, I would like to see some of the names like Cat, which we got in Friday. I would like to see some of those start picking back up. It would make me feel a lot better. We can't go just on tech. We're going to have a little of everything coming in. But yeah, I mean, tech looks pretty good right now. At least it looks the best right now.
So do you see the cat chart?
Yeah.
Right there?
Yeah.
Here's the DE chart, very similar. And I like both of these names a lot. I'm holding both right now. Small positions. I'm not heavy in either one, but I do have a little bit of money in both, and I like them. Chris, Mr. Kiteboarder, is asking about Boeing. So he's holding March 365 calls that you think are toast. We're at 343. Boeing got hit really hard. Bloomberg also came out with a negative article. I don't want to say negative. They came out with an article saying that Boeing could get hit really hard with the aluminum and steel tariffs. But I think long term, I still like Boeing a lot. I think that we kind of need to watch and see what happens on Monday and Tuesday of this week to get a clear direction. Let me go out a little bit further on the chart. Yeah. So it broke that level of support, came back, found the next level, and then turned around. So I really want to see this base here. I don't know if your calls are necessarily toast. If Boeing wants to rally, if Boeing wants to move, Boeing can move. We've seen Boeing make $10, $12 moves in a single day. So I don't know at this point whether or not your calls are necessarily toast, but I do think that Boeing needs to turn around and go the opposite direction of where it's been going this week in order for you to at least, retain some of that premium. Does that make sense? So Nate is asking, when buying earnings plays, how conscious are you of stocks that are getting close to their 52-week highs? I notice a lot of them test and then stop out if they don't break. So with earnings plays, I'm very picky about what we call in the room YOLO for earnings. YOLO meaning you only live once, and I typically won't hold through earnings. There's a very few or a handful of stocks where I may hold through earnings, but it's usually one contract. I 9 times out of 10, I'm not holding more than one contract through an earnings event.
I got burnt holding Walmart through ER after, and Visa, as far as that goes. Visa just happened to be on the wrong week, I think, more than anything. But still a long-term bull in Visa, absolutely.
So as far as being conscious of what the stock is doing, if I'm trying to just play a ramp up to earnings, we kind of have to look at how far in advance I'm trying to play that, because I'm 9 times out of 10, again, I'm not going to hold through the actual earnings. But if I am playing it out for a couple of weeks, I don't want to buy it at a 52-week high. If I can get in, under that 52-week high and try to play a break of that 52-week high, that I might do. Or I may, even if it's at a 52-week high, if I see strong momentum, I may try to scalp intraday. But if I'm swinging, yes, I do watch where the stock is in relation to the 52-week high, and I'm looking to just play that break. So if it tests that 52, I'm going to sell, or I'll sell 80, 90% of the position. I may leave 10 to 20% in case it continues to run after that.
And another thing too, if you're holding stock through an ER, that's one thing. If you're holding options through an ER, that's where your YOLO is. If you're holding, Walmart through an ER, it's going to hurt, right, if they miss. But if you're holding options through the ER, it doesn't hurt. It feels like just pure shit. I mean, that's fighting Mike Tyson, right? If you're right, you're right, and it feels really, really good. But if you're wrong, you're really fucked. So that's the thing. I don't like to hold options through an ER. I'm more likely to hold stock occasionally, like I held Walmart and Visa. I shouldn't have, but holding stock through an ER, I feel a lot better about. Holding options, that's where it's 50-50. If they come in flat and you're holding stock, great. You haven't no loss. But if you're holding options and they miss, you're toast. So that is one of the biggest things about options. ERs hurt. If they hit like Splunk, that feels really, really good. If they miss like Walmart, it really sucks compared to owning the stock. So I just want to throw that out there too.
So Nate followed up. He said, I'm not holding either, but I'm buying stocks that beat earnings and revenue. So in that case, it's not a bad play, but you want to kind of wait for things to shake out. And I'm assuming that you're buying the shares. You're not buying options on them. Is that correct, Nate? So if you are, I guess here's my thing. If a company comes out and they beat and they run after the ER, I may play that post ER run, but when I see that it's starting to give back a little, I'm going to sell. I may re-enter it again, but I don't want to, I just want to catch that quote unquote excitement after the ER, right? I'll play that little ramp that it has afterwards, and then I may get out. And if I want to buy it long term, I'll wait for the sell off and then go back in.
If a company checks all four boxes, right, which we always talk about, EPS and revs, current quarter EPS and revs, guidance, right? If they do beat all four boxes, clean breaks, and I'm not talking about baby beats like we beat by, we were supposed to do $1 million in revs, so we did $1 million and $2. I'm talking about we did $1 million in revs, and we did, we were supposed to do $1 million in revs, so we did 1.1. Clean beat, right? 10% beat. Those are the kind of companies I really love to buy about a month before the ER, before the next ER with options. And, that you will see a lot of excitement, especially if you've just had a clean box check on all four things. You'll see a lot more of those that really ramp into ER. Facebook's good about that, running into the next ER. MU's good about running into the next ER because, they've been clean box checking, right? So anyway, and CRM's another one. Always runs about a month into right before ER, which we didn't talk about that one today. We probably should have. That is the first quarter I have seen CRM not sell off the day after ER. So that was very, very impressive on CRM. I was all ready to short because every quarter I short CRM for the last couple of years. Not this quarter. Congrats, Bulls.
CRM was crazy this quarter. Like I can't remember a quarter where it hasn't dropped, right?
I can't remember. I don't remember that. I don't remember it. They may have had one, but I wasn't playing it at that point in time apparently. And that's the thing about the market. Every time you get the pattern figured out, they throw you out for a loop because we even talked about it in the room. Hey, get ready to short CRM tomorrow. Get ready to short CRM tomorrow. And sure enough, nope, no shorts. But anyway, that's a good example of running into the ER. So if you look at that, it runs into every ER. Why? Because it's clean beats every quarter. So it's going to run into ER. So that's one that I don't know when they'll release next, but about 30 days beforehand, pick up a couple calls.
Exactly. So the next question is on FedEx. Will it turn around? Andrew is holding March 23rd, $257 calls, just one. Let's look at FedEx. So here's FedEx. Oh, on the year, break of the neckline, head and shoulders. Coming down. I want this to stay probably above 238. Let's say 238.50 to give it just a little bit of space to, try to go lower. Why, Tim, do you remember why transports took such a hit? Because transports in general were down.
I really can't. I don't know. I'll be honest with you.
I like FedEx long term. Wall Street loves FedEx. He just loves it. Their earnings, when is their earnings? They are scheduled to report on March the 19th. I think that there is a possibility that we could see it start to move up a little bit going into that ER.
There's one thing. Hold on. It says, what is this? MAERSK says to compete with UPS and FedEx. This conglomerate breaks up.
Did you get Amazon? Is that what it was? No, this was after. I think they got Amazon before. Remember, Amazon said they were going to come out and do something.
This was on February 20th. There's some, I don't know how you say MAERSK. Says to compete with UPS and FedEx. This conglomerate breaks up. That's the last thing I see, really, that
So FedEx, it absolutely could. It's at an interesting spot, right? If you look at what time frame was I on? 1 year, 1 day. If you look at the chart, it is at an interesting it's at an interesting spot. I think this is another one that we're going to have to watch. I think that going into this week, especially Monday, Tuesday, I think that will really, that should give us a clear idea of what to expect from the market overall. That's just what I think.
Where was it at 2 weeks ago? I can't tell by this chart, but where was that 2 weeks ago? On the 20th?
The 20th. Whoops. What time frame am I on? I don't know which one I clicked. Hold on. Oh, that's 10 days. So how many days ago was that, Tim?
20th, 14. Or I'm sorry, 12.
So let's go 20 days. I wonder why it doesn't give me the dates down here. That would be helpful. On the 20th, you said?
Yeah, that's that news that I found.
That's the 21st. Here's the 20th right here.
Okay, so yeah, I don't know.
Yeah, it took a little bit of a hit and then it rallied and now it's selling off, or it sold off. It's actually at a pretty interesting spot. I will keep an eye on this one. There's a possibility it could turn around.
Into ER especially. I'm going to watch that one too now, actually.
I like it. Let's see. ZAG. Brett is asking about ZAG. I like ZAG a lot. Let's go here. Let me pull it up.
Actually, we talked about ZAG yesterday.
I know, right? Here is ZAG.
Don't they have ER coming up?
Yeah, they do this week.
Yeah. Okay.
So ZAG is also kind of just, it could drop a little bit more, but it's kind of holding on to a little bit of support up here in that $14 area. I'm actually surprised to see it to see that it's not coming up as much this close to ER. This could be a good one to watch. I do like ZAG. Just overall, I think that they, with, with their screen protector thingies or whatever, there's always phones out, right? All the time. There's always new phones. People are always getting new phones. They're always upgrading. They have, they have a really wide market to work with. I haven't looked too much into the balance sheet or actual fundamentals of the company, but I do know that when it wants to move, it can move. Nate is asking, what do you think about YY earnings for tomorrow?
It had a good day Friday.
YY. I like YY. Yeah. YY has not disappointed yet.
It's an interesting. It's kind of at an interesting. Pull it up, yeah.
Actually, I was reading something about YY. It was a Seeking Alpha article, so please don't, it's not like it's someone else wrote it. It's their opinion. But I liked what he had to write. Let's see. Wall Street is expecting, I think, 543 million, a little over that in revenue. Earnings per share at $1.78.
Here's the thing. YY's, typically it moves all day and for multiple days. So it's one of those that if it does beat, we'll probably be able to find a play on it. Okay.
I agree. I don't think they're going to disappoint.
We'll find a play.
Yeah, I think that YY will do well. Just again, and I know we can't really look at past performance. What do they say? Past performance does not direct future movement or whatever, or guarantee it. But I like YY a lot. I think that they will do well. That is definitely one I will be watching tomorrow. Michelle's saying that FedEx was the NRA thing, the guns, because I saw something on Twitter. I think, yes, it was on Twitter that said that FedEx was there. They were not going to go the way that everyone else was going. They were going to stick to what they were doing.
Well, you know what? Here's the thing. Every time, and this is proven with Target, Kellogg's, Disney, I've got a big long list. If you look at 2016, 17, when the markets were just still ramping and everything was going up, there was a few companies that got a little too political. Starbucks, that didn't make the move everybody else made. So to me, I think the companies, and I'm not saying what they should just say, listen, we don't get involved for either side, and that's the best answer, right? Some of these companies, if they think cutting out one group is going to help them over another group, it doesn't usually work. They just need to all just get out of politics, and people need to keep companies out of politics. But anyway,
and Michelle was saying that it was with the NRA thing. FedEx said they were not going to take away their discounts. That's why they took a hit. There was a lot of companies that said they were going to take away the discounts that they were giving NRA people, and FedEx said nope. We're not taking away those discounts.
I wonder. Yeah, look at Delta. That worked out real good for Delta.
Good deal.
No, don't look at deal. Let's look at Costco.
Costco. Bobber wants to know, what about Costco? Costco has earnings this week, right?
Yep. And on 129, almost hit $200. So this could be interesting.
Definitely be interesting. I like Costco. Costco is one of those ones. What was it? Was it last quarter where the move kind of surprised people? I thought, if I remember correctly. Let me see if I can find it.
Well, that, and when there was a report about a bunch of Sam's Clubs going bye-bye, they had that big day.
Is this the last ER back here? That was October. What month is this? This is March. Yeah, they were down and then moved back up. Costco's one. Costco's not one I'm going to play the actual ER. Again, I don't like to hold through ER. I'll wait until afterwards and see how the market reacts, and then I'll play it. But I do like Costco.
Same here. Long-term bull, short-term cautious because of ER. Nate, I finally got my questions up here. What do you think about X with steel tariffs, and do you like other places? X is X, man. We talked about getting splunked. You can get X'd too. It's pretty easy. I think everybody that's ever traded X more than 5 times has been X'd at least once. They got a downgrade, I believe, also on Friday. There was a big sweep for $2 million above the ask. That was interesting. I believe Friday we actually picked up one contract, just one, because, you know, it's X, right? It's hard to say. Nobody really truly knows what's going to go on with these tariffs, and if any of this is real, and it's still playing out. So I don't know. We're going to have to get to see who really, you know, right now I think a lot of people are playing chicken. So we'll see. I need more information myself personally.
And there's that sweep. It was 11 or 12:18 Eastern time, 11:18 my time. In April, it was a sweep on the April 48 calls. 10,000 calls filled above the ask at $193.5, for a total of roughly 2 million. And that's the sweep that we played. I think it's one of those where, you know, we bought one just to see what happens with it. I don't think that we truly know how the tariffs are going to affect the market just yet. The initial reaction, if you remember, what was that, Thursday? Yep. So here's Thursday. Well, not me do this. Okay. I was trying to expand it or make it bigger. But on Thursday, that was kind of funny. They were, you know, we had, okay, we're going to have an announcement. No, we're not. Yes, we are. Announcement, huge spike, and then a retreat, and then we got hit with a downgrade. So the initial reaction was, yay, you know, everyone was really excited, stuff like that. But there's a lot of different factors that are going to go into that, to the tariffs in general. So there's a lot of different things that are going to have to be considered. And I think that I don't think that we truly know enough at this point to know exactly how, or to even get a clear picture as to how the market's going to react, how those sectors are going to react.
Oh, Vishal just gave us a little update. Futures coming up a little. Dow down 60, SPY down 7, Russell down 7, NASDAQ down 8. Thanks, buddy. Appreciate that.
Thank you.
Guys and gals, 1 hour in. Any more questions? We'll all go enjoy our Sunday nights.
Any last minute questions? And if we missed your question, I'm sorry. I apologize. Sometimes it's hard to scroll through all of these and catch them all. But if you do have questions, you know how to find us. Follow us on, if you don't follow us on StockTwits, Twitter, YouTube now. We do have a YouTube channel. If you're a Black Box member, please DM us. If it's during trading hours, just understand that we might not be able to respond very fast, but we will respond. Or, you know, if you are interested in joining Black Box, please do so. We'd love to have you. You can go to www.blackboxstocks.com and sign up there. And is that all, Tim? Anything else? Any last words?
That's it.
Perfect. I hope you guys have a great week. Stay green, and we will see you next week. Take care.
Thanks, everybody. Bye-bye.